Hello, this is Anka Metcalf with TradeOutloud.com, and this is my weekly market outlook for the week of December 5th, 2015, and also my swing trading ideas coming into next week. So first, let's take a look at the market and see how the market reacted last week. And we're going to start with the chart of the Qs, Nasdaq here, ETF. We did not take out this prior high that was formed on October 25th at 119.66. We came very close to that though at 119.50, from which we pulled back hard into 115, and we actually stabilized at 115.20, from which we bounced in this area on Friday. So Monday and actually next week, we're going to see how this will play out, because this is a very neutral candlestick that we have right here. So there's a tug of war between the bulls and the bears, leaving two shadows, one at the upper side and one in the lower side, price stabilizing somewhere in the middle. So here's the story for tomorrow. If we're going to break over 116, we might have odds of continuing higher, and the targets throughout the trading day are going to be into 117. For the week though, if we continue to be bullish, we're going to try to tackle this 119.50 area. If we're going to break below the 115.20 area, the area that has been tested on Friday and also on Thursday, most probably we're going to come in and retest these lows right here that we have once again tested on November 4th. And also they were tested on September 12th. So this is going to remain our void area. So to start the week, we have to be very cautious, because most probably it's going to be very neutral. So tonight's trading activity from the futures market is going to give us a glimpse into tomorrow's trading. So we're going to pay attention to whatever happens overnight. But if we remain in the same parameters, most likely we're going to have a sideways day. So remember, if we're not going to take out 115.20, most likely we're going to hover into these lows of 115.20 and 116.20. So it's about $1 range. So we're going to hover into that area. But once again, if we break above this area, we do have a considerable void to recoup back into 119.66. Let's take a look at the SPY. SPY's different story. SPY's escaped from this chop range that we've had for, I would say, for about 2 months, more than 2 months. Very sloppy sideways patterns, pretty much what the Qs are doing right now. We escaped to the upside, taking out this prior high at 119.50, thus sending price higher into a target area of 221 right here. And now it's coming back. So the comeback area, the support area, as I see it right here, is 220 or 219.50. So it has a little bit of cushion area. So from which we're bouncing right now. Take a look at Friday candlesticks. Perfect doji. It's a battle between the bulls and the bears. They landed in the middle. They're at the negotiating table, so they don't know who is going to be in charge, and obviously we don't know who is going to be in charge definitely for next week. So that will remain the question, and I think that as long as we're going to maintain Friday's parameters, and I'm talking about the low that has been established for the last 2 trading days, meaning Thursday and Friday, at about 219.20 area and a high of 220 area. So this is going to be the battleground for tomorrow, because if price is going to escape this resistance of 220 to 2025, then it has room to continue higher into this prior set high at 221.80. If we break below the low, careful, because we're into tons of cluster support from the left hand side of the chart here, and these are support areas that were formed from August. So we're going to be very careful, and we're going to be cautiously bullish on the SPY moving forward. So that's pretty much it. If we break below this 219 area, there's more downside to it. We could actually come into the 218, 217, 217.50 area. But once again, remember, we have this cluster of resistance to the left-hand side that is going to make trading to the downside very choppy for the SPYs. And now I guess you've been waiting for the next trades for the following week. I do have a plethora of trades right here. Not very appealing to me, and I will wait for more confirmation on Monday to see the clear direction in them because when we have a market that is not stabilized either to the upside or the downside, so it gives us blurry vision into the next day. Then we should be a little bit more cautious. But without further ado, these are the stocks that are on my watch list. The first one is UTX. Okay, so UTX, as you can see right here on the daily chart, it escaped from these lows at $100 and right now it's trading higher. I just want to zoom in a little bit so you can see that it's tackling these highs right here, 110 for the high, also into resistance right here, and the pullback. A pullback seems really nice for a daily buy. We have a good support area at 106.99, and it has further targets into the 110 area. And most likely, what I want you to see is that we're escaping. So once we break above this 110 area, that's why I want to kind of like get in a little bit with half a shares of this UTX. I'm not going to be fully loaded on this, and I'm going to wait for a break above the 110 area and possibly another pullback that will offer me a better support resistance area and a confirmation that price can actually trade above the 110 area. But what I like is the void that it has into the 124 area for a potential core trade. Beautiful for medium and long-term trade. This is very bullish. Just keep in mind that once we're going to get this break once again over this 110 area, it's going to be super, super powerful. All right, let's go back to the daily chart and put up the next trade for next week, which is Home Depot. Home Depot has been struggling this year, but if you look on the monthly chart, let me pull it real quick right here, you can see that it's quite bullish. Okay, it's quite bullish. It's doing a turnaround on, and definitely last month it did a turnaround, a really nice turnaround in price. Right now the price is into the upper 25% of last month's trading activity, which makes it relatively bullish. So for that reason, I'm going to go back to the daily chart and I'm going to show you what I'm looking at. I'm looking at a break of 130. So this would be considered a good entry for me. And I'm going to look for a stop below 128.70. I'm going to look for further targets into the 136 and obviously targets layered all the way to the 139 level and possibly even higher into the 140s. So this makes it a good risk to reward trade. Next one that is on my list is Microsoft. Microsoft is into a very bullish base as it is right here. So from this October 21st, when the stock gapped up, it rallied and then it came back, tested the prior resistance area, came back violently even more without taking out the major support area that we have at 55.52, forming this new layer of support right here, pushing the price higher, tackling new highs, making a new high into last week, and then obviously even the strongest stocks are getting taken down by their ETF. Okay, so push back down, but I love this area right here. It's right into this congestion at $59, and I think that a break of $59.50 can push it higher back into the 61 level, and actually I could see more projected highs into the 62, into the upper 62s and all the way into 65 for even for a core trade. All right, Verizon is the next one on my list, and Verizon is setting up really nicely. It's trying to do a reversal on the daily chart, so that's why it's very appealing, because this is the first pivot, the higher low that we have on the daily chart. So this might be a reversal. The hourly chart, however, looks even better because we do have support right here, and you can see that the pullback happened into a prior support area from last week. And okay, let me just take this off. All right, there we go. Okay, so the reason why I like it over $50 is that it has room to run into $51, $52, $54, $56, and into the upper 56. So last target would be 56.80 for me. So I really like Verizon for a continuation higher, and this is the first sign that it's ready. It might be ready for a trend reversal, and especially onto the daily chart. McDonald's. McDonald's is also very interesting. It was beat up stock throughout this year, and if you take a look on the monthly chart, you can see that pretty much since the month of May, it has been correcting. Very interesting reversal into November. You can see the month of November carried it higher. The price for December is in the upper half of prior months trading activities, so which makes it bullish. So going back to the daily chart, what I see here is that the price is trying to erase all this chop to the left hand side and is trying to push higher into the 120s and 122 area. So keep McDonald's on your list. If you like this stock, just pull it on your list. It might do a really nice reversal into the next few days. CLAC had a serious reversal as well. Like I said, Nasdaq pulled all these stocks lower, and so far resting on support $74 and change. A break over $77 can push the price back high into $83 area. So this is CLAC. NEM has a very interesting pattern. This is more of a core trade for me. And I want to pull the weekly chart right here. So it's trying to ascend. So we have a series of ascending bottoms right here on the weekly chart. So it's trying to break above $34. This is going to be my entry right here. I'm going to watch it at $34 with a stop under 30 with a projected target into these highs right here at $46. One more stock that I have, and this is a bearish stock. It is ILMN, and I'm going to pull the daily chart right here. After the gap down, and actually the gap down occurred into support area, so that's why it had a very, very hard time. So it bounced a little bit. Everybody thought, okay, it's going to do a gap fill. Remember that once you have a gap, it doesn't necessarily have to fill. Okay, so it all depends on fundamentals, on how the price is going to react, and definitely how fundamentals are lining up. But so far, we can see that this support has been breached at 133.50 and price is falling. And what is sad is that it is breaking a major support level that has been tested, guess what, guys, since last year in April. So if we break this level of 126.80, boom, we go to the downside. $100 for a first target, $80 for the second target. So ILMN goes on the bearish list. Hope this helps. I hope you all have a very profitable trading week. And if you have any questions, feel free to email me at info@tradeoutloud.com if you want to enroll in one of our classes, or if you want further information about our swing trading newsletter, in which we post and we call 5 trades per week, 2 to 5 trades a week, depending on market behavior and market environment. So if you have questions about the newsletter, if you have questions about our education, about our swing trading class, feel free to email me, info@tradeoutloud.com, and I hope you all have a very profitable trading week. See you next week.